Good morning. Welcome to the War Room. I am Malik. Today is Wednesday, March 18th. If you looked at your screens yesterday at the closing bell, you saw a green number. You saw that the KSE-100 Index climbed 837 points to close at exactly 50,016. And I guarantee you, across financial Twitter and retail brokerages, people are breathing a sigh of relief. They think the 150,000 floor has been reclaimed. They think the bleeding has stopped. Let me shatter that illusion right now. Yesterday was not a recovery. Yesterday was a textbook dead cat bounce. It was an algorithmic anomaly driven by an absolute ghost town of an order book. The main board saw a pathetic 260 million shares traded. That is anemic. That is the sound of institutional capital sitting entirely on the sidelines with its arms crossed. When the smart money refuses to participate, it takes almost zero capital to push the market up 800 points. The index floated back to 50,000 simply because there were no aggressive sellers left to push it down. Today, we are going to dissect the anatomy of this low-volume trap. We are going to look at the massive cluster of mystery meetings hitting the tape today, and I am going to show you exactly why the 150K level is no longer a floor, it is a battlefield. Let us break down the exact mechanics of Tuesday's 837-point crawl. On Monday, the market bled out nearly 4,700 points on 298 million shares. Yesterday, it bounced 837 points on 260 million shares. What does this tell a forensic tape reader? It tells us that the downward momentum is heavy, but the upward momentum is entirely hollow. The foreign funds and local institutions did not suddenly decide that the 55 rupee fuel hike was no longer a problem. They did not magically forget that the western border is locked down. They simply stopped selling for one afternoon. And when the selling pressure temporarily vanishes in a highly illiquid market, the automated market maker bots push the bid-ask spread up to hunt for liquidity. If you bought into the market yesterday thinking 150,000 was safe, you bought into an empty room. And the moment the institutions decide to resume their liquidation cycle, that 837-point gain will be erased in the first 10 minutes of trading. That brings us to today's corporate calendar, Wednesday, March 18th. The PSX board roster today is incredibly dense. We have a mix of massive annual accounts and highly suspicious mystery meetings cutting across the manufacturing, brokerage, and power sectors. Mark your screens. 10 a.m., Frontier Ceramics Limited. They are holding a meeting in Rawalpindi for matters other than financials. The ceramics and construction materials sector is highly sensitive to energy prices. A mystery meeting here signals a supply chain pivot. 11:30 a.m., Service Industries Limited. Dropping annual accounts in Lahore. This is a massive pulse check on the manufacturing and export board. Service Global Footwear is also dropping accounts at 10 a.m. We need to see how badly their export margins are bleeding. 12:15 p.m., Trust Securities and Brokerage Limited. A mystery non-financial meeting right in the middle of the trading session. When a brokerage firm calls an emergency meeting during historic market whiplash, it usually points to margin debt restructuring or severe risk mitigation. 1:30 p.m., Saif Power Limited. They are meeting in Islamabad for matters other than financials. Another massive power sector player calling an emergency meeting. The energy grid is restructuring its financial survival plan in real time. Watch the power board. Here is your battle plan for Wednesday. 1. The 150K battlefield. We closed at exactly 150,016. This is not support. This is a mathematical coincidence. Expect violent chop around this level today as algorithms test whether the buyers are real. They are not. 2. Ignore the low volume green. If the market pushes up today on low volume, do not touch it. A low-volume rally is a trap set by the market makers to draw retail liquidity into the order book before the next institutional dump. 3. Strategic preservation. We are in cash. We watch the boardrooms restructure. We watch the power sector struggle to survive the macro shock. We let the leveraged traders fight over an 800-point dead cat bounce. Protect your capital. Command the Wednesday. Disclaimer. StockSense is an educational platform. I am an analyst, not a financial advisor. The market is facing unprecedented geopolitical volatility. Trade at your own risk.